Welcome back to the channel. I'm Algabot, and today we're studying an expert advisor for MetaTrader 5 called Range Action Trend Ignition. This strategy is built around a classic technical measure by Shand, the Range Action Verification Index, or RAVI. What makes it interesting is how it uses that indicator as a way to notice when a trend may be starting to form out of a quiet, sideways market. Over the next few minutes, we'll break down how the indicator works, how the entry and exit rules are coded, and we'll walk through a chart illustration step by step. Remember, this is educational information only. Let's get started. So what exactly does this expert advisor do? At its heart, Range Action Trend Ignition watches two simple moving averages, a short responsive one and a long slow baseline, and it measures how far apart they have pulled. That distance, expressed as a percentage of price, is the Range Action Verification Index, or RAVI. When the two averages are tangled together and sitting almost on top of each other, RAVI is small, and the market is essentially ranging or chopping sideways with no clear direction. When the averages separate decisively, RAVI rises, and that separation is the footprint of a developing trend. What makes this approach distinct is the word ignition. Rather than using RAVI as a passive background filter, the strategy treats the moment RAVI first pushes up through a small threshold as its signal. That transition, from a quiet, entangled market to averages that are fanning apart, is interpreted as a trend igniting out of consolidation. The idea is to act early on that transition, instead of chasing a move that has already run a long way. RAVI itself is deliberately direction blind, because it uses the absolute distance between the averages. So the strategy reads directions separately, from the sign of the divergence, and from where price closes relative to the short average. That keeps the trend strength question and the trend direction question cleanly separated. This expert advisor reads everything from the primary time frame, so it runs on whatever chart time frame you select in the tester. Its natural home is a trending foreign exchange major or a metal such as Eurist, PUST, or ZOST, on time frames from 30 minutes up to 4 hours, but it is designed to be symbol and time frame agnostic. In terms of style, this is a trend-following, transition-hunting approach. It suits a student of the markets who is curious about regime detection and wants to understand how a range can be told apart from a trend. As always, trading involves risk, and losses are a normal part of any approach. Let's walk through the mechanics step by step. The expert advisor works on closed bars only. It checks its rules once per newly completed candle, so it isn't reacting to every flicker of an unfinished bar. On each new bar, it calculates RAVI two ways: the current value on the bar that just closed and the value on the bar before that. Comparing those two is how it detects a fresh cross. The entry condition is what the strategy calls an ignition. RAVI was at or below the ignition threshold on the prior bar, and it is now above the threshold on the just closed bar. The default threshold is 0.30%. Because foreign exchange price ratios sit close to 1, that threshold is a small fraction of a percent rather than the 3% Shand originally used on equity indices. If RAVI does not make that fresh upward cross, the expert advisor simply waits. When an ignition does occur, the strategy then decides direction. It looks at the sign of the divergence between the two averages. For a long, the short average must be above the long average, so the averages are fanning bullishly, and the closing price must confirm by finishing above the short average. For a short, the mirror image is required, the short average below the long average, and the close finishing below the short average. That double confirmation helps filter out cases where the averages have separated but price is not actually leading in the same direction. Now for risk management. When a position is open, the expert advisor uses the average true range, or ATR, to frame both the stop and the target. By default, the stop is placed 2 ATR away from entry, and the take profit is set 3.5 ATR away. That gives a reward-to-risk shape of roughly 1.75 to 1 on each trade, measured in volatility units rather than fixed pips, so the distances adapt as market volatility changes. There is also a third, concept-consistent exit. If RAVI collapses back below the threshold while a trade is still open, meaning the ignition fizzled and the trend failed to develop, the expert advisor closes the position early rather than letting a stale trade drift toward its stop. And to keep things disciplined, the strategy holds only one position per magic number at a time, so it never stacks trades on top of each other. Let's look at the actual MetaQuotes code that runs inside the Expert Advisor. At the top are the inputs you can adjust in the tester. Short period and long period, defaulting to 7 and 65, are the two moving average legs. Ignition threshold, at 0.30, is the level RAVI must cross upward. ATR period, ATR stop multiple, and ATR target multiple, at 14, 2, and 3.5, control the volatility-based stop and target. Lots sets the position size, and Magic tags the strategy's own trades. Just below, you can see RAVI being computed for the current bar and the previous bar, the absolute difference between the short and long averages, divided by the long average, times 100. The ignition line combines them, the previous RAVI at or below the threshold, and the current RAVI above it. That is the fresh cross. If it is not present, the function returns and nothing happens. Then direction is resolved. The Boolean named bull is true when the short average is above the long average and the closing price is above the short average. The Boolean named bear is the exact opposite. In the bull block, the entry is taken at the ask, the stop is placed 2 ATR below entry, the target 3.5 ATR above, and the order is sent with trade.buy. In the bear block, the entry is at the bid, the stop sits 2 ATR above, the target 3.5 ATR below, and the order goes through trade.sell. Both sides share the same structure. Only the direction and the placement of the stop and target are mirrored. It is clean, readable, and it maps directly onto the logic we just described. Now let's bring it all together on a chart. On the price candles you can see two lines, the faster short average that hugs price, and the slower long average that moves more gently beneath it. In the panel below the price is RAVI, with a dashed line marking the ignition threshold at 0.30. Look at the first few candles on the left. Price is drifting sideways in a tight band. And notice how the two averages are wrapped around each other, almost overlapping. Down in the panel, RAVI is pressed low, while beneath the threshold, inside the shaded ranging zone. This is exactly the entangled, range-bound state the strategy is designed to sit out. There is no separation between the averages, so there is nothing to trade, and the expert advisor simply waits. Watch what happens next. A stronger bullish candle pushes price up and away from the range. As it does, the fast average lifts above the slow average, and the two begin to fan apart. In the panel, RAVI climbs and pushes up through the threshold. That fresh upward cross is the ignition. Because the short average is now above the long average and price has closed above the short average, the direction check confirms a long, and the buy entry marker appears on that breakout candle. The stop is set 2 ATR below the entry, and the take profit target is placed 3.5 ATR above, giving that reward to risk shape of roughly 1 3/4 to 1. Follow the next candles. Price continues to climb, one higher close after another. The averages stay separated and RAVI holds comfortably above the threshold, which tells the strategy the trend is still alive, so there is no early exit. A few candles later, price reaches the take profit target and the long trade is closed for a completed move. This is the ideal case the logic is chasing, entering just as the trend ignites, and stepping out at a predefined target. After that run, look at how the market cools. Price stalls near the highs and begins to roll over. The averages drift back toward each other, and down in the panel RAVI slides back below the threshold. That fading of RAVI is important. It is the market returning to a quieter, less directional state, and the strategy is patient through it, holding no position and waiting for the next clean transition. Now the second setup develops. Price starts to slide, candle by candle, and this time the fast average crosses below the slow average, so the averages are fanning bearishly. RAVI turns up again and pushes through the ignition threshold for a second time. Because the short average is now below the long average and price has closed below the short average, the direction check confirms a short and the sell entry marker appears. This time the stop is placed 2 ATR above the entry and the take profit target sits 3.5 ATR below. Trace the final candles. Price works steadily lower. The bearish separation between the averages widens and RAVI stays elevated above the threshold, confirming the down move has genuine momentum behind it. Price then reaches the lower take profit target, and the short trade is closed. Notice the symmetry across both trades. In each case, the strategy waited for a quiet, entangled market, then acted on the single moment the averages separated decisively and RAVI ignited through the threshold. It took direction from the averages and the close, framed its risk with ATR, and stepped aside at its target. Had the ignition fizzled instead, it would have closed early. That is the whole idea in one picture, distinguishing a genuine trend emerging from consolidation and trading only that transition. Of course, not every ignition leads to a clean trend, and losses are a normal part of any strategy. This is an illustration of the logic, not a prediction of results. That brings us to the end of our breakdown of the Range Action Trend Ignition Expert Advisor. We covered how the Range Action Verification Index measures the separation between a fast and a slow-moving average, how the strategy treats a fresh upward cross through its threshold as a trend igniting out of a range, how it reads direction from the averages and the close, and how it manages risk with ATR-based stops, targets, and an early exit if the ignition fades. Everything here is educational information only, and nothing in this video is financial advice or a recommendation to trade. If you found this helpful, please like the video, leave a comment with any strategy you'd like analyzed next, and subscribe for more MetaTrader 5 strategy breakdowns. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.